Welcome to Momentum Monday. Today is March 7th, 2021.
Hello from Lindsay and Howard. How are you?
I'm pretty good.
Lindsay would like to know how pet stocks perform. You were on the right side as usual, Ivan. You had more short setups last week, so congrats. I know you might not have shorted, but the market was signaling some short setups. So
I
very
got some
nice.
put
Oh my
options
goodness.
actually, so yeah.
Look at some of these sell-offs. Hang on a sec. That's interesting. That's almost a 40% drop. I mean, you whip around the market type, and this was a nutty week.
So yes, if you take a look at all the big leaders from 2020, the SPACs, biotech, cannabis, crypto-related stocks, all of them are down between 30 and 50% just for the past month. So
Wow.
that little part of the market has actually experienced a pretty significant correction in a short period of time. Even the Nasdaq 100 itself had a 10% correction and it tested. That's a very important level here.
It is. That's a big breakout from the summer.
Yeah, these are the highs from September, October, November. So this is a very important level. I mean, if we bounce here and continue higher, we're just back to business. But if that level is broken, we might enter into like a longer, choppier period, at least for this side of the market. In the meantime, the S&P 500 is barely down. It's only less than 3% from its all-time highs. Mm-hmm. And the main reason for that is the price action in the so-called alt economy stocks. We're talking oil and gas, financials. I mean, energy stocks have been super strong. I mean, I'm not talking clean energy. I'm talking about alt energy.
Yeah.
They've been on a tear for the past month or so, and there's so many breakouts. Even last week, I don't remember.
That's unbelievable. Yeah. It doesn't interest me, but yeah, the money is not coming out of the market is what we're saying.
Absolutely. It's just rotating into other areas of the market. I mean, there's no reason for the money to go out of the market when you have a new $2 trillion stimulus check every 3 to 6 months. So obviously money will continue to speculate.
Hot potatoes. This is a hot potato market right now.
Yeah, it will just rotate. So I don't remember when it was Wednesday or Thursday when the market was down a lot last week. And I mean the indices, and then I tweeted, believe it or not, there are like 250 stocks that are actually making new 52-week highs today, and most of them were like all those alt economy stocks, oil and gas, financials, and some others. So pretty incredible market. I mean, I would call it like it's basically the Warren Buffett's market. All those value
insurance
stocks.
and financials, and my dog is licking me. I mean, listen. If we look at Chewy, well, let's go top down. The biotechs were leading. That was the sign of risk on, right? Like, so if we go to the biotechs, and I went to Nibbles McGinty last week, kidding aside, because, my sentiment meters were on. It was just a trade idea that, Peloton at 100 is not cheap, nor are the biotechs, which I was buying on at the 200-day on Friday. If you're not going to buy great companies at the 200-day moving average in a bull market, I don't think you're ever going to make big money in the market. Okay, so I like to buy strength, but in a bull market, you get a few chances throughout the year to buy the 200-day moving averages, and you have to be prepared. And it's not fun to step up when everybody's selling and the headlines are bad, but this is when you can build a portfolio of things that were, they're not cheap, and they never sometimes get cheap, especially growth ideas. And yes, biotech, maybe the vaccine story is played out, but trillions of going into healthcare. And if you can buy if risk remains on, and that's if, and it should, and if rates don't explode higher, and they shouldn't, then a couple times a year you have to, be prepared. And it's not pleasant, buying weakness, but this is still a very much upward sliding 200-day moving averages. And you have to sometimes zig when others are zagging. So what were you seeing this week? Obviously you got right a lot of the short signals. What were you on Friday looking at?
I mean, Friday we saw quite a few major reversals in different areas of the market. So probably we might see some follow through at least on Monday or Tuesday. Energy, oil and gas stood out again. So many breakouts and stocks that are just setting up. I mean, oil is already back to its pre-COVID, pre-lockdown levels. And then you have so many oil stocks, I know you don't care about them, that are still 50, 60% below their pre-COVID levels. So I think we might see some good good value opportunities there. For example, I bought this one, EC, on Friday. I think it has a 50% upside from here. Obviously, you need to be very patient. It's not going to happen in a week, like with all the SPACs and stuff. Financial super strong. As I said, a lot of reversal candles. At some point on Friday, the biotech ETF XBI was down 27%.
Look at ARK, ARKK. I mean, she's going to defend her own 200-day movie. She was probably buying like a mad woman. They gave her 50 billion to spend. She's going to defend the 200-day moving average, and she did. And it was just, we'll see if that's some kind of short-term bottom. But if we start taking out those lows in the next month with some veracity, there's something else going on most likely. But
yeah, it would be a big change. But this reversal candle, I mean, technically, we should see some form
on a Friday before the weekend, that's very bullish.
We'll follow at least until this declining 20-day.
But in the old days, this stuff would take time. We could be back at all. I mean, I don't understand. These markets have changed. Yeah. I mean, GameStop is blowing my mind. So if we pull up GameStop, I don't understand anything if this is still at 100. For people, I like to say I have a better intuition than most because I've done this for 30 years. But things like this blow my mind. There's people shorting this thing, and I get why they think they're right. And I don't understand anything about how this is trading. At what value? At 10 billion? What's the valuation here?
10 billion, yes.
It's basically bankrupt unless they do something creative. And kids don't buy their games at stores. Maybe they trade them at stores. But this is defying all gravity and logic. And it's kind of a miracle, but it's also scary. It's like a great white shark. It's just sitting out there lurking. I don't understand what's going on. And so I'm not caring, but there's just some weird shit going on in the market. And it's, probably a distraction, but this kind of stuff freaks me out that people are behaving this weirdly. The action that we saw in the SPACs to me made sense. There's a lot of bad deals. There's a lot of crowded EV space. There's companies like 6 years out from having business models that are getting SPACed. And that's not how I would do business. And those things were getting hammered.
Yeah. So many of them just
hammered
50% or more.
Yeah. And I think you're going to see this endless supply. If they don't trust the sponsor, these things are going to get hammered. And Lemonade probably got hammered because the insurance SPACs just have been puked.
Most IPOs go public at a very high valuation anyway, and especially in the past few months. So it's kind of.
But if you're not going to buy Lemonade at its IPO, then you just, which is an institutionally supported, insurance leader. This is that broke 10. This is another Chamath SPAC. This is my friends, the Cohens, that did this deal. They're very smart in insurance. I don't know the Metromile story. It's a very exciting idea to pay by the mile. But here you go. You get to buy the company at the SPAC price. It doesn't mean it can't go to 2. Like, people think these things can't go below 10. No, this can go to 0. But at the same time, pretty much we're back to square one. Again, I don't know which investors have hung on and if this is turned over, but everything. And if you really want to do this, you're pulling up the IPO ETF. I mean, this is, it's thinly traded, but this is how you play the whole industry. This is a ticker if you really like growth in IPOs. The Renaissance has done a great job with this ETF. and it's a way to own the high beta IPO leaders. So everything kind of crescendoed quietly on a Friday, right?
Yeah.
And I think ARKK is the one to watch, just because she is there buying the biotechs and the genetics.
No, the biotech is ARKG. It's
No, but I'm saying ARKK has like all the innovation stuff. Okay, what's that one? ARKG?
yeah. I mean, it's the same.
Yeah. Well, look at CRISPR. I mean, I love that company and that founder team, and that's down 50%. You know, I bought a little on for my long-term portfolio. You know, should it have been 200? No, but you know, down 50%. You know, these problems are not going to go away. These problems are only going to escalate in genomics
Yeah.
and our focus. You know, so you get a chance. You know, 2 years of gains were wiped out in a month, right?
Yeah.
You know, if you loved it at a double the price, I don't get it. Like nothing changed except interest rates rising and people itchy trigger fingers. There's some interesting. So what do you like? What's your gut?
I mean, if interest rates continue to rise, and it seems the market is kind of discounting that, we might at some point see like a change in narrative, because for so many years, for like a decade, interest rates were declining and they were low, and they're still low, but now they're rising. And because of those declining interest rates, no one really cared about valuations. That's why we started to see some software companies, you know, initially trading at like 2-3 years ago, we thought that companies that are trading at 8-10 times sales were crazy, crazy high.
Right.
And this year we saw some companies trading 80-100 times sales, you know, like Snowflake. And this was kind of considered normal. And I'm wondering if those interest rates keep rising, if this narrative will change. And if it does, then we might, software stocks, or the majority of them, might experience significant corrections in the next, you know, few years.
Yeah,
That's just a
I think,
possibility.
yeah,
I'm not saying it's going to happen.
this is the time to just be on alert, and it's a reminder that markets can be mean and vicious. And if you weren't, you know, people, you know, for about 3 months, I was booking some profits, and but at the same time, let's look at what held up. Let's look at a few names that held up. Google held up
Absolutely.
beautifully.
This holding so strong. I really
Yeah.
don't know why, but it's looking amazing.
How do you like? It's like nothing happened. And then if we look at the NDAQ, which has to go back on my list, the Nasdaq. I don't know if it's under. I mean, that is the epitome of that is the Nasdaq. So at the same time, money is not coming out of the market, and it's our job to kind of look around. So if I was to say what's going to lead, CME, so the exchanges are now starting to move. So if you see, those are big breakouts.
Yeah.
Right. So the exchanges and Google. So the exchanges and Google's an exchange in its own right. You know, it's hard to be scared. That's why I was stepping into some of these 200-day moving averages, because no one's scared of Google. Even Facebook's not doing a great job, but just kind of is hanging in there while the tech was selling off. It was
sideways.
Yeah. So it's kind of like FANG has become your money market. And I'm not saying that's normal. Again, this is like the market. People have to remember, with GameStop going on, there's some weird shit going on. And so, you know, if you're nervous, it's okay to have a lot of cash right now. But at the same time, money's not coming out of the market. It's staying in the stupid stuff like GameStop. It's, you know, you got the biotech at the 200-day moving out. You got Google breaking out. You have the CME, CBOE, and NASDAQ. That says something. Those are like MasterCard and Visa at some level.
Yeah,
let's take a look at MasterCard. Take a look at MasterCard. Well, Square was pulling back 30-40%. Visa, MasterCard.
Both are setting up for a breakout, yeah.
Yeah, and I'm long MasterCard in my 8 to 80. So again, and I added Peloton to my 8 to 80 finally on Friday at, I don't know, what is it at? Pulled back 40%. Sorry, I'm going to own Foley's company. This is like Netflix for you know, physical, this is Netflix for fitness. You know, it's never going to be cheap. It's just never going to be cheap. And, you know, a 40% pullback is, you know, it's, listen, the stock can see 60, no problem, or 50. But again, at $100 down from 160, this is, you finally get a chance to add names. And, you know, if rates don't shoot up much higher from here. And by the way, the mantra's now rates are going through the moon, right? 2 trillion's coming out. So the mantra's finally caught up at least to the idea that rates could go higher, which is generally a good sign, because 2 months ago it was like rates are going negative and we'll never see it. And the Fed will never raise rates. Remember that mantra 2 months ago?
Yeah.
Yeah. So now the mantra is rates are going to infinity, which is bullish, because they're not going to infinity, because, you know,
The government owes too much money, so they cannot afford that.
They got their blinders on. So I think healthcare, I think, you know, I think you can see it in Google and in the exchanges, and you see it in Goldman Sachs, which has kind of reinvented itself finally as a brand. Money is looking for a home right now. So it's really important in the next 3 months to kind of see what happens. What happened, I think, in DocuSign and Zoom, where is the COVID leaders? I'm super bullish on Zoom. I'm not giving up.
I mean, you mean the tech leaders from COVID? Most of them are experiencing, you know, pullback. I mean, that's normal, as they went up 1,000% in less than.
Where's DocuSign? Where's DocuSign? Yeah, I mean, so they're giving back 4 months of gains, 6 months of gains. This is nothing. This is how markets work. Things are in the end. This is now a year of digesting gains, which, you know, that's how great stocks work. They go sideways for a year instead of down. So you've got to pick your entry. I'm not interested in DocuSign, but I'd rather pay up and for strength. But this all feels pretty normal.
Look at Tesla. It went from, you know, 7 to 50 or whatever, 800%, and then it spent, you know, 6-7 years going sideways. So this is normal.
This is normal.
Yeah.
And if you overpaid, you could be sitting with dead money, but that's just how tech works. And it's called digesting gains. So we'll keep I mean, the action in Google, Goldman, CBOE, CME, NASDAQ, and the biotech's hitting the 200-day moving average. It's got me interested. Peloton hitting the 200-day moving average. There's a lot of stuff going on. And rates now at 2%. So we've got that initial correction and digestion of a big interest rate move relative, you know, on a percentage basis. So, and look at Shake Shack. I had some Shake Shack tonight. I mean, look at Shake Shack. It can do no wrong.
Shake Shack, yeah. I mean,
yeah,
kind of building a base. Yeah.
Yeah, I mean, this is at all-time highs. Like, they won the burger war. I now have declared, like, I won't go to Five Guys.
They don't have the best burger, especially in San Diego. In San Diego, you should just call me. I'll tell you where to go. They don't have the best burger. Okay.
No, but you know what I mean. If you're just in the mood and you don't want McDonald's and you just like are driving, there's enough Shake Shacks now to give you your burger. And I've done that a couple times this year. I'm not buying the stock, but if I were to buy a restaurant stock, I think they've won the burger war on a scale. I'm not going to go to the competitors. They just somehow did a great job through COVID. They're moving people, and it's modern and tasty enough that they are gonna be a force from the brand perspective. So a lot of stuff good going on. We'll end it there, unless Ivan. And on short stuff, you wouldn't short into this market right now, would you?
Not after the Friday's reversal, and obviously if that low from Friday is taken, or we see a weak rally to a declining 20-day, which turns into, you know, more weakness, they might consider shorting. But for the next few days, I think the bulls have the ball right now. So let's see how far they can get.
Look at Ivan. The bulls have the ball. We'll end it on that, my man. Have a great week. It was good to see you last week. I'm back in Phoenix.
Oh, cool. All right.
See you.